Okay, so let's start with, like before, I say thank you because somebody introduced me, I go, thank you. I'm Manolo Zúñiga. I'm president and CEO of PetroTal. I'm based in Houston. I'm glad to be back at the Pareto conference, although next time I truly hope that we can do it in Oslo or in London, like before. In front of you, you see the picture of the Britannia oil field. Besides the fact that this is a beautiful picture, I always like to highlight a couple of things. One is that this field, Britannia, that has now 51 million barrels of 2P reserves, is a large field. It's about 4,000 hectares large. And we're going to develop this field from this single site that has only 11 hectares. And why do we do that? Is because we're adjacent to the Pacaya-Samiria reserves across the river. So managing this is very, very important. The wells, the oil wells, are going to be drilled under the river, across the river, under the Pacaya-Samiria reserves. Most of the wells are going to be horizontal wells. We're going to be drilling some also going to the south. And then in the flanks, to the left, to the right, we're going to be drilling some water disposal wells. The reason we need water disposal wells is that the Vivian Formation, which is the producing formation of Britannia, is an extremely permeable sand supported by a strong aquifer. So we don't need to worry about energy in the future. We have the Mother Nature providing the support in the future. We just need to make sure that we process all of the fluids that we are going to produce and export all of the oil that we have. I always call this a factory. We're going to build a factory that's going to end up having about 20 oil wells that each one producing on average 10,000 barrels of fluid. That's 200,000 barrels of fluid per day at a 5% oil cut. We've got 10,000 barrels of oil per day that is actually, providing you excellent cash flow. Our costs are down. We are next to the river, so it's easy. A good example of that is last April when oil prices crashed, Brent averaged only $26. We had a positive EBITDA, including G&A. When oil is at 50, we have a total cost of $27 per barrel, which is outstanding, as you can imagine. On the next slide, you see, I mentioned earlier about the 2P reserves of 51. We started actually in the first certification 3 years ago with just 39 million barrels of 2P reserves. And at that time, we had 79 million barrels of 3P. I have always guided that we're going to end up somewhere between the 2P and the 3P. So right now we're at 51 and 110 EUR on the 3P, still thinking that we're going to end up somewhere in between the 2P and the 3P, because I expect the recovery factors initially estimated at Britannia are going to grow through time. And that's exactly what's happened. We started with an initial estimate of 2P recovery factor of 11.5%. We're now actually at 15%, and we intend to continue growing that to the 20% plus basis. We're always very conservative in nature, notwithstanding we work in the Amazon jungle of Peru. Our run rate for this year is set at 11,500 barrels. That with an EBITDA of oil at $65, we got an EBITDA of $141 million. The company has executed almost flawlessly from a technical point of view. And the reason for that is that our senior technical team, a dozen of us, come from Oxy. And we all work in similar fields nearby Britannia, so we know how to manage all the logistics, the geology, the oil, and that's why we have done so well. Last year was a difficult year. We had to deal with the pandemic, some social unrest, but I have promised all of my investors we're going to exit this crisis stronger than before. And one of the things that we had to do, of course, was secure financing, and thanks to the efforts of Pareto, we closed a $100 million bond offering. And with that, we can be able to set up our own hedges as needed. We have also renegotiated the contract that we had signed with Petroperu. The new contract, which is extended, allows us to sell our oil at the first pump station of the pipeline. But now Petroperu, using its own balance sheet, will hedge the oil. That avoids any contingent liabilities like the ones we encountered last year. Tell you more about that in a couple of minutes. And also now we have begun exporting oil via Brazil. So now we have the opportunity of going to the west via the pipeline or using the Amazon River to the east. And that now has provided the needed flexibility. All of that combined and the fact that now we directly engage all of the indigenous federations with whom we work very closely, I feel that we are stronger than before. And the plan now, with a fully funded budget, is to again go back to growing production and not only meeting our initial goal of 20,000, but hopefully, as I'll show you, surpassing that. The map on this next slide, Peru, you can see in the presentation, the block 195, that's where Britannia is, the river, you see it in that initial picture. That river is the Ucayali River that comes from all the way southern part of Peru. And then when you see it joins the Marañón River, it forms the mighty Amazon River. It's truly a mighty river. Usually the length of the river is counted from the beginning of the Ucayali, which is why I think the Amazon River, probably the second longest river, and probably one of the strongest ones. You see also, important to highlight blocks 192. This used to be the Oxy block where our team used to work, and block 8. And block 8 is where my father actually made the initial 5 discoveries in the Loreto area of Peru in the early 70s. Oxy came later. Combined, these two blocks have produced more than 1 billion barrels of oil, about 70% of that from the Vivian Formation, which is the producing formation in Britannia. I'm talking about more than 1 billion barrels from a total of about 16 fields. So Britannia follows that same trend. The oil goes into the pipeline all the way to Bayobar, where it is exported. Eventually, Petroperu, that buys the oil at Saramuro, will take it to the Talara refinery, where it should be completed. The upgrade should be completed by November. Recently, about a week after we raised the $100 million bonds, Petroperu raised the final $1 billion to complete that work. And as such, you can imagine that Petroperu is very much eager to be able to enjoy the benefit of all of the production from the Amazon jungle, especially nowadays that they have been assigned the Block 192. And with a joint venture partner, they're going to be operating this block that quickly should go back to the 10,000 barrels per day mark. And I mentioned all of this just to showcase that Petroperu, that is owned by the government, is fully aligned to making sure that production increases in the jungle and increases on a consistent basis. And us now having the flexibility of going to Brazil, we are now feel that we have or managing our risk profile very well. About a little bit of the history of the company, I always like to highlight the fact that when we took over the Gran Tierra assets, there was one oil well that had been drilled and one water disposal. We told our investors that we're going to have that well on production in less than a year, and the equipment will cost us less than $25 million. We did it in 6 months for $70.5 million. That's at the stage of the way we have operated since then. We also told our investors at the beginning that the initial capital was to do that and drill our own oil well. And if the concept was proven, as we expected, we will need to go back and raise additional equity, which we did. So very upfront on our plans, as you can imagine. So we grew production more than 10,000. We were on our way to reach the 20,000 mark by 2020 when the pandemic hit. And the pandemic, given that Peru is still a poor country, also had some social issues that came along that we have now worked together to have production back again. And with the bond offering done, we are back to going back to the exiting this year close to the 20,000 barrel per day mark, and then surpassing that next year. So the strategy of the company is very straightforward. And one looks at this slide and sees, well, that's very common. You want to grow production. But in the case of PetroTal, is growing production from one single field. You're going to grow reserves, yes, but it's also from one single field that has excellent netbacks. And you see how we've been growing the reserves, even on the 3PKs, from almost 80 million to 106, which plus the 4 million already produced is about 110 EUR. And again, I continue to say that we should end up somewhere between the 2P and the 3P number. Very confident in that. Everybody nowadays talks about ESG. That actually is in our hearts, and we have to assume a leadership role on ESG vis-a-vis the government, the indigenous communities. They like that, and that's something that allows us to continue working and growing the company in Peru. Of course, I have always said also from day one that given that Britannia oil is 19 API gravity and requires some diluent, which is somewhat expensive, Our oil is fortunately low in sulfur, no heavy metals, so I consider that a light oil. Maybe doing something small that allows us to substitute buying expensive natural gasoline for light oil will be fantastic. I've been thinking about that for a long time, and maybe now we have the chance to do something like that. But the effort really is in the exploration. We have Block 107 with a lot of that potential for exactly what we're looking for. Light oil, 40, 45 API gravity, and I'll show you at the end of the presentation what we're looking at, which could be fantastic. ESG, on this slide, I always like to highlight the fact that even though we're next to the natural reserve of Pacaya Samiria, which is one of the few reserves that the local people are allowed to hunt into, so we actually work very close with the CERNAMP, which is the agency of the government that manages this. We work, for example, very closely to save these little turtles that were almost going in extinction, and that's type of the effort that we do. Everything taking care of the environment, even our new system of power generation controls noise pollution. Those machines are so silent that you have to actually approach them to see if they're working or not. And we're very close to the community, so having these machines quiet is very important. And besides the fact that we use our own crude oil, instead of buying diesel that is very expensive at $130 a barrel, we use our own oil that has a $5 lifting cost. That alone has increased the value of a reserve for more than $100 million. On social, it's always the very simple concept. If we offer something, we do it. And that's something that we strive to do. And also with full transparency. We have people from the community inside the camp supervising, they write reports, they share them among the communities. We're fully transparent the way we communicate with everyone. Just very briefly on Peru, just the fact that Peru achieved investment grade a few years back, they're not going to do anything to impact that negatively. And the reason for why that is important allows them to access inexpensive financing. At the end of last year, they raised $4 billion at LIBOR plus 170 basis points, even with 100-year notes. And the government understands that the pandemic hit the Amazon is very hard, and they have committed capital to make sure that they also grow with everybody. Our project, we always promote the idea of empowering the local communities, and this support from the government is going to go a long way. And the reason the government does all of that, besides the fact that Peru now is very much engaged with us, is that Peru is a growing country that requires more crude oil for years to come, and they like our project. So let me go to the Britannia field very briefly. And I was mentioning about the fact that I intend to end up somewhere between the 2P and 3P reserves. My goal has always been to end up with a recovery factor of closer to 20%. And you see it, 20% of 364 million oil in place, that's give you 72 million barrels, exactly between the 2P and the 3P number. And the concept is that, as you see in the bottom right chart, to have a plateau of production above 10,000 for as long as possible, and above between 5 and 10,000 as long as possible, because anything beyond 5,000 is going to free cash flow a lot of money, and that's what we want. But a year ago, we had a similar chart in one of the presentations, and this plateau above 10,000 only lasted 9 years. Now we're at 12 because of the increased recovery factor. So now you can get a sense why is that we want to manage this very carefully. Right now we have 7 oil wells. By this time next year, we will have 12 producers, and then so by middle 2022 we have drilled all of the initial 15 wells, and probably by the middle or late 2023 we will have done drilling all of the wells and look at the amount of free cash flow from the future. I like the F&D cost. I like to look at it on a forward-looking basis. You see the proof is about $5.40. You know, on the 2P basis, you can see that it's about $4. So it's outstanding. You know, we have cost of 27, $4 of F&D, talking about $31, and the rest is pure profit. On slide 9, it shows you how we go to growing production again. Most of the money goes into the drilling. By the end of this year, we should be done with what we call these central processing facilities 2. They were supposed to be completed at the end of last year, but the pandemic, we had to evacuate all of the construction people. We only left production people in the field. We have a very strong COVID-19 protocol. I think we're the only company in Peru that in the oil and gas that has a SGS certified protocol. And we all not only take care of the people in the field, but also our neighbors in the communities. And the CPF2 will be completed now in the third quarter of this year, but at the same cost that we originally expected. And actually, the processing facilities are already on their way to Britannia. We manage our CapEx very carefully. And here you can see a good example of how conservative we are, that our budget this year was approved based on $50 oil at a run rate of 11,500. And you can get a sense of the EBITDA at different prices. So this year, we're going to drill one deviated well initially, then water disposal, and then we're going to have 4 horizontal wells. On this other slide, it showcases some of the history. The funds from operation, you see the impact of the COVID, but on the right-hand side, I usually like to highlight that we have now a strong balance sheet. We expect to finish the year, and this is with oil at $50, with about $70 million. And look at the working capital that we have. This is the contracts that we have with all of our service providers, mostly Schlumberger, Petrex, Certecpec that builds the facilities. They have provided excellent terms because they trust the project, they trust the management team, our technical team. Allows us to have a project that has on a full cycle capital efficiency of 11,600 barrels. So it's truly outstanding. I mentioned about the recovery factors. You see these are analog fields like Carmen that with 20 API, 30%. These fields have produced for more than 40 years. Our contract is only for 20. That's why you have also lower recovery factor. But again, all of these analog fields showcase that we will end up closer to the 20%, 22%, similar to what you see in the San Jacinto field that has heavy oil. So that's the key for us. On this slide, I like this because it zooms in into our forecast. You see the importance of the 3P wedge and the fact that through time we continue to try to have this plateau extended more years above 10,000 barrels per day. We pay a lot of attention to our 3-year EBITDA because our bonds are based on 3-year term. And you see that now at $70, we have $590 million of EBITDA in the next 3 years. We have plenty of money to pay the bonds and to even take care of our 3P capex would allow us to have this extra wedge. And we trust that that'll be the case. On average, our wells are going to produce 3.4 million barrels. Now with oil at 60, 70, talking about more than $200 million of revenue for wells that cost you only $12 million. And that's the impact of this project. It's a free cash flowing machine. The facilities are now on their way, as I mentioned, and all of the tanks are going to be completed in August. At that time, we will have a total of 90,000 barrels of storage capacity. You see that the facilities are set to also tackle our 3P production forecast of up to 25,000 barrels of oil per day. Export routes, as I mentioned earlier, for us was very important to be able to go the export route. We did an initial export pilot of 106,000 barrels in December. Here you see that we plan to do a second pilot of 200,000. I can tell you that last night I was informed that we had completed the second export of 225,000. We were able to add an extra barge and they go all the way to Itacoatiara, where a tanker from the US picks up the oil. The good thing about this contract is that we get paid FOB Britannia. So we invoice and then 5 days later we get paid. People sometimes ask me about the fact that, what happens if the pipeline breaks down and you cannot use the pipeline. Well, now we have the Brazil route, but we have done the analysis. And it depending how much access I have to tanks. If I have access to pump station number 5 tanks plus pump station number 1, I have a total of 700,000 barrels of capacity. That will allow me to put in the pipe 12,000 barrels of oil per day for close to 60 days. Keeping in mind that I sell a little bit of oil to Iquitos, which is close by, in the refinery here. Unfortunately, that's all they can take from us. And then we plan in the future on a consistent basis, sell the equivalent of 8,000 barrels per day via Brazil. So I could actually, for almost 2 months, produce 21,000 barrels of oil per day with no problem. And that's the importance of having this flexibility and understanding the logistics that get involved depending how much access I have to the tanks. Let me go now to the financial side. Very quickly, I'm going to cover some of the key issues. We're extremely happy with the bond offering, $100 million, 12% coupon, yes, but and it was good support. You can see how broadly it was done, but it sets the stage for us to be able not only to pay some of the liabilities that we had, but more importantly, have the monies to be able to develop Britannia, complete the development of Britannia, and then at the right time, put a hedge in place. And we plan to do something that is going to protect the company, enjoying some of the upside as well, before by the time probably you guys listen to this presentation in a couple of weeks. So that's extremely important for us. On the netbacks, you can see here that we have netbacks with oil at $50 in Saramuro via the pipeline of $24. As I mentioned earlier, the sale to the Iquitos refinery are fantastic for us, but it's a small volume. In the case of the export via Brazil, the netbacks are about $3 less, about $2.50 less, but we plan to improve that. We know how to do that, and through time, we expect to have the same netbacks either going west or going east, and therefore have full flexibility. And you see the netbacks as we grow the oil prices at $40.50 per barrel, and that's why this is a free cash flow machine once we're all done with all of our capex. The free cash flow generation, that's also, again, very focused on the next 3 years. And you see that at $70, we're generating free cash flow of $440 million. About the contingent liability that we had last year with Petroperú, fortunately, things are completely reversed. The fact that there's still 1.8 million barrels in the pipeline that was part of that contingent liability, now we have turned around. And once we sell that oil, we expect to get from Petroperú $39 million. And we don't put that in the free cash flow. This is to manage our working capital. So everything is well set up for us to grow in the future. And these are based on the current strips that we have, as you can see here. So as a summary of the financial side, at the right, you see this chart that shows you what we expect to see in the next 3 years. This chart is based on a $50 oil, the EBITDA that we generate, the capex, the working capital. We hardly pay any taxes. When we bought the Crantera assets 3 years ago, they left behind $300 million of NOLs. We have enjoyed the benefit of that. We will start paying some taxes at the end from 3 years from now. That's why you don't see much in taxes. And then, of course, we pay back the bond and left us at $50 oil, $120 million. But if oil is at 60, you add another 142, and the oil at Brent, you add another $140 million. And that's what the company can achieve in the next 3 years. If oil at 70, $400 million of free cash flow. So in summary, you see a company that have worked very hard. We have proven our ability to execute. There's no question about that. The execution has been flawless. It's thanks to the senior team that we have. And we enjoy the benefit also of the younger guys that are like sponges, learning from them. So we have a fully funded capex. We have a clear path in the future. And we have the opportunity to always optimize things. And I would like to wrap up the presentation by going to this other slide that shows some of the upside, but especially in Block 107. We are targeting to drill the Constitution prospect in sometime next year. And this is important because, as you see, it could be about the same size as Britannia, but we expect it to be 40-45 API gravity oil. We could use this as a blending agent for Britannia, where we could save $1 per barrel. So drilling a well that is going to cost us $20 million of finding oil like this will save us $50 million in Britannia. And not only that, but because the oil was generated in the western flank and migrated to the east, if we find oil in the east trap, we know that the migration happened at the right time, and as such, it will highly de-risk the Osheki prospect that has, on a mean basis, 500 million barrels of light sweet oil, and that's where we're going. Step by step, taking the proper steps with a team that knows how to execute. That is PetroTal at its best. Thank you so much.